Hi there, good afternoon. This is Your Stocks. I'm Mangla Malu. With me is Sumaira Abdi. Looks like a good afternoon for the markets. We're at the high point of the day with a gain of about 120 points for the Nifty, around 350 points for the Sensex, and the mid-cap index, while it is underperforming along with the Nifty Bank, remember it has come off a fair amount from the lows of the day. There's some news coming in on Glenmark that it's entered into an agreement with Grand Pharma for Ryaltris. We'll try to get in some more details on that one. But as far as the markets are concerned, really nothing to complain from the frontline index space, because you have the IT stock which is batting for the bulls. Tech Mahindra up around 7% as we speak. We have Bajaj Fin as well as Bajaj Finserv, both of them moving to the high point of the day. However, in the mid-cap end of things, we have volatile stocks which are leading the F&O pack. So we have Dish TV, which is up about 9%, and it's both. It's now 25% of the lows of the day, but remember at one point it was 25% of the highs of the day as well. So volatility continues for Dish TV. SRF, after reporting a good set of numbers day before yesterday, is now up 9%. Positive commentary coming in from the management in the conference call. We have CESC and Infibeam as well, which has been a big underperformer over the last few months, currently buzzing around in trade. We've recaptured the 11,000 mark after 1st October, sustaining above that, Sumaira?
Yeah, that's true actually, but there's a lot to be said about what's happening in the broader markets, right? Because even look at the market breadth, on the NSE, there are just about 736 stocks which are advancing for over 1,300 which are on the losing end. So, the market breadth is a factor that would be worrying, though the frontline indices for now seem to be powering away. But let's take you through our top stories.
All right, meanwhile, we're awaiting a lot of numbers, most notably from the pharmaceutical space. The numbers from Lupin as well as Cipla should be coming by in the next half an hour. We also have JSW Steel reporting the numbers today. Adani Ports and SEZ also will be reporting the numbers. We're getting in numbers from Gateway District Park. Remember, this is a standalone set of numbers, so we'll keep an eye out on that. The net profit low by about 17.5%. We'll keep an eye out on what the company's posted on the top line as well as EBITDA. So a mild spike, and that has been sold into. Revenue growth of 6% with a profit decline implies that perhaps the margins may have come off. But Cipla at the high point of the day ahead of numbers, so we'll keep an eye out on that for Cipla. Remember, the previous quarter results were muted on account of weak margins and weak US business. The management had guided for a weak second half. Let's see where that comes about, given the stock has already corrected from levels of 672 thereabouts. A longer term chart should tell you about the Cipla's price correction over the last few months. From 672 odd, it's come down to around 520. But we have a lot of earnings to contend with. Marico reported a mixed set of numbers in yesterday's trading session, just towards the dying hour of trade. We had volume growth which came in at around 5%. The margins contracted while India volume growth was below what the street was working with. We have the MD and CEO Saugata Gupta joining us to discuss the company's third quarter performance. Thanks a lot, Mr. Gupta, for joining in. Now, despite a decrease in copra prices both year on year and sequentially, if you could explain to us, why was it that your gross margins declined?
I think you have to look at it from a point of view of consumption. Obviously, the copra prices started softening only this quarter. So in consumption terms, it will start reflecting, some forward quarters. As far as the outlook is also concerned, that as you know that the prices went down and then there was a slight increase in prices once again. And we believe, however, year on year, there would be a 15 to 20% reduction in the input costs, of copra. And therefore, there would be some margin flow. But having said that, I think we will continue to invest behind our new products aggressively and to drive volumes and volume growth and market share.
Hi, Mr. Gupta. Good afternoon. But, even the volume growth has not come by. 5% growth was actually lower than your own medium-term outlook of 8 to 10%. So can you take us through what the outlook would be?
If you see it in the context of volume growth, in the context of the fact that actually it was brought down by Saffola and the non-focused part of the coconut oil portfolio, which competes with a lot with unbranded and local brands. Than that. So I think, yes, it was a tad lower than expected as far as the overall volume is concerned. But I think directionally, as far as Parachute volume is concerned, it's doing well. All the new products are doing well. And as far as value-added hair oil is concerned, I think we should be able to inch it up towards the double digits over the next few quarters.
All right, we take your point, Mr. Gupta. I'll go back to the first point with regards to your input prices. Now, minimum support price announcement, will that limit the decline in copra prices? You expect a 15 to 20% decline there?
I think it's significantly above the minimum support price currently, and that's the reason we are giving a view that given that as soon as the season opens, it should be around 15 to 20% lower than what it was annualized level last year, which will be actually above the minimum support price, definitely.
Okay, so in that case, will 8 to 10% volumes, you think, be likely in this year and the next?
As far as FY19 is concerned, we'll also end with 8. We are still tracking YTD 8. And we have to push that definitely by another 1 or 2% next year.
All right, so this year 8% volume on the cards. Along with that, next year maybe you'll push it by 1 to 2%. But let's talk about the part of your business which is not doing too well. Saffola, taking too long, longer than expected to recover?
I think Saffola is taking significantly longer time to recovery than expected. Having said that, I think as far as outlook is concerned, even in our second half, we should be clocking 5 to 6% growth. I think there has been a quarterly base effect. We are still working towards moving it towards 8 to 10, which is taking some time. And I think the two things which we need to do is a much more broader participation at the premium end, which we haven't done well in terms of innovation, and second thing, driving differentiation through both communication and influencer marketing. As far as new products is concerned, I think already aloe vera has gone to scale. We are pretty, the other things like True Roots, which is which is delays graying. There is a product on, we are test marketing on Extra Care, which is a hair fall product in the East. Some of them are showing good traction. The male grooming and the serums continues to grow well. They are on a good momentum, and we are extremely confident of they delivering 15 to 20% growth. So overall, I think we are in a much better position in new products than what we were, say, a couple of years ago. We are also pretty hopeful that the other two new products which we have recently launched, one is Saffola Fitify gourmet range, and the dry fruit oil, which we are test marketing in 1 or 2 markets, they also will get scale. So overall, I think we are in a much better position than what we were in a couple of years ago. And yes, obviously everything will not do well, but at least I think our strike rate will be far better, and they will contribute to a certain critical mass. So this part of the new part of the portfolio is definitely going to grow 15 to 20%, if not more, over the next 2 or 3 years.
You know, we're seeing a ramp up in new product launches. So, what will be the big driver, you think, going forward? And the one thing that a lot of analysts want to know is, has Marico's edge blunted?
One of the things we're investing ahead of the curve in both the new channels, which is modern trade, e-com, and also digital marketing capability. And I think some of these categories, the penetration itself is low. If we look at male grooming, if we look at packaged foods, if we look at, and I think some of the products are unique and differentiated. So if we executed them well, I think I think that needs to be the driver. The second one is agility. I think this needs a far more higher velocity of innovation, much more agility, much more appetite for experimentation, fail fast, and therefore this is something which requires a new operating model and mindset. So we are setting in place, I think we are putting in place this new operating model which will actually drive this kind of a growth in the new things. And I think this opportunity is already being exploited by a lot of entrepreneurs in premium niche, which perhaps large scale manufacturing companies, CPG companies have been little slow in exploiting them.
All right, we understand that the entrepreneurial small players are doing good, and the large scale PCG companies are a little slow in that. So in that regard, what is your view on competitive intensity and from both small and large players, and what is your long term, say 3-year target for Marico with the revenue breakup? How does that look?
If I give you a broad flavor, first I think let me address the competitive intensity. Yes, I think there is a competitive intensity which is going to increase. Having said that, I think in some of the categories we are operating, the penetration being so low, it makes sense actually for 2 or 3 players to participate in it, because if they invest in both innovation and behind marketing, I think the category grows. And when the category grows, we need to get into a point of inflection, which we are seeing in some of those categories. As regards our split of sale, I think it's an AND strategy. I don't see any different targets for India and international. Both are invest to grow markets, and we are lucky that even in our international markets, most of the markets have healthy GDP growths. They are relatively stable in terms of both currency and, as of right now, political stability. And therefore, macro stability being there, I think both can grow. The way we look at, in terms of the revenue growth is how do we actually grow, take our top line into a 13 to 15%, CAGR, which means a double-digit growth in international business, a 10% growth in volume growth India business, and the rest coming through inflation and mix of premiumization. And the second issue is how do you reduce your dependence on Parachute and Saffola core, which is happening, which we have done perhaps much more aggressively in Bangladesh, which we now need to do in India.
Okay, so Mr. Gupta, for FY20 then, could margins remain between that 18 to 20% range?
I would rather say 18% plus. I think it's very early to give an outlook on margin, but will definitely be 18% plus.
All right, margins will be definitely 18% plus. Meanwhile, we're getting the GNPA figure for Muthoot Finance. It's coming at 637. This compares with 606 crores quarter on quarter. So there's been a mild worsening in the non-performing assets for Muthoot Finance, and which is what the street is taking note of. Understandably, the stock at the low point of the day. So gross NPAs as a percentage of the total assets also have risen a mild bit from 1.91 to 1.96, and on an absolute basis higher by about 20 crores quarter on quarter, 637 crores, which compares with 617 crores. But before we slip into a short break, just a word on Reliance Infra. Now that stock is down 34%. In fact, for this week itself, it's down 45%, 34% shaved off Reliance Infra at the low point of the day, 77 rupees of that stock. With that, we take a short break, come back, and we focus on answering some of your stock queries when we return.
Hi, welcome back. You're with your stocks, and it's time we get answering the queries that have been coming in. Rajat Bose and Vijay Chopra are the two experts who join us this afternoon to answer the many queries that are coming by. So, gentlemen, good afternoon to both of you. We're actually waiting for Lupin to announce numbers this afternoon as well. So, we have a query coming in from an investor who wants to talk about Lupin. Geeta C writes to us from Mumbai. She has 89 shares of Lupin, which she has bought at just under 1,300 rupees, I think 1294. She's a long-term investor and wants to know what she should do at this point in time. Vijay, for a long-term investor, what should the call be on Lupin?
If somebody is a long-term investor, I reckon that it should be for a period of 5 to 10 years. And I think that, pharma, although it has been in stress for a long time now, but I think it's in the process of bottoming out. The likes of Lupin, Glenmark, Dr. Reddy's, they seemingly are some of the better names in the entire pharma space. So if somebody can hold on, I think that, one thing I would recommend is a stop loss is vital. So I would recommend that hold on with a stop loss of 750. And who knows, if things start improving, then Lupin can again go up to maybe 1100, 1200 levels. And this is quite a possibility. Pharma story is here to stay. And Lupin is one of the better companies in the entire pharma pack. And I think most of the pharma companies have now set their house in order. Post all the onslaught we have seen from US FDA in the last few years. So again, I think that if somebody is a long-term investor, they should not exit. They should show some patience, and times would be good for pharma in the coming times.
All right, hang in there. Times may be good for the pharmaceutical stocks. Lupin currently just about 100 odd rupees away from its 52-week high. We have Mr. Nishit Bhatt, who writes to us from Gujarat. He has around 550 shares of Cipla at 630 rupees for the last 1.5 years. Long-term investor wants to know whether to hold or sell. Again, Cipla to report its results today. It's a caller. Okay, Nishit, tell us. Nishit?
No.
Yep, go ahead.
Hello.
Yep.
Yeah, I'm a long-term investor and I've been holding it for about 18 months or so. And I've seen good price in Cipla, but since about 3 months, the prices have fallen like anything. So what I want to know is there a good future in, say, next 1 year, 2 years or so?
All right. Fundamentally, over the last 3 months, the reason why the price has declined is because their previous quarter results weren't very good. Margins were a miss on expectations. US business did not do too well. And the company's outlook for the second half of this year wasn't very good as well. But since you're a long-term investor and the price is way off your buy price, let's get into a technical query as to, is there support around these levels? Rajat, your view on Cipla, should our caller or should our viewer, maybe average at these levels, or the stock is going further lower? Rajat? All right, I believe that our audio is not going to Rajat right now. Vijay, Cipla, what would your view be?
Well, again, similar. What I said about Lupin a few moments back, I think that although the markets have become quite wild and we've seen, large caps even beaten down 20% in a day. So there is a good recommendation that people should follow stop losses on a daily basis. So again, my recommendation would be a stop loss of 460 is what I would suggest. It's a bit deep stop loss, but I think that it should be kept whenever you trade. And secondly, I think that Cipla also has a good potential to bounce back. So they are some of the...
All right, I believe that there is a bit of a scrambling in terms of lines with both Vijay and Rajat. We'll answer our viewers' query, but broadly, Vijay says that for the pharmaceutical stocks, you hold on, and perhaps patience is something that will reward you. Over the last 3 months, Cipla was lower in trade. But we'll save it to a short break. Before we do that, a quick note for our viewers. The new rules for DTH and cable have come into effect from February 1. To keep watching India's #1 English business news channel, CNBC TV 18, just call your cable operator or your DTH operator and ask for CNBC TV 18 only for ₹4 per month.